My name is Jordan James. I am the owner and founder of Plantfolio LLC. You know how this goes. Investing comes with risk. Invest at your own risk. Tonight, we are just having a brief overview of the stock market, about investing. So let's go ahead. Let's get started. All right, so for anybody looking to begin investing, looking to get into the stock market, the first thing you need to do is have some savings. That's the number one thing. Also, open a brokerage account. It doesn't matter what brokerage account you open. It could be through your bank. It could be through TD Ameritrade, Charles Schwab. It can be whatever financial institution you want to utilize. Once you've set up a brokerage account, you connect it to your bank, you fund it. Then you go into the brokerage account. It can be an app. Nowadays, brokerage accounts, they come with apps. So you can actually complete all of this, the opening of the brokerage account, the funding of it, and the searching for the stock, all within about 10 minutes. The goal for stock traders, it's all going to be different. It's contingent upon what you want to do. So as far as you getting into the market, opening a brokerage account, funding it, you would have to figure out what your goal is. What is it that you're looking to achieve? Should you invest in the stock market? Of course, investing comes with risk. Invest at your own risk. I personally invest in the stock market because I use it as a vehicle to drive my money. So it's whatever it is that you want to do. If you have something that you can utilize to make your money grow for you, more power to you. The stock market is just a tool that I use to make my money grow, to drive my money. I would say the smartest stock investment that you can make is by investing in a company or companies that you currently do business with. Say, for example, look at the clothes on your back. Look at the shoes on your feet. Look at who you bank with. Look at the car that you drive. Look at everything around you. A lot of these companies are publicly traded unbeknownst to us. So really just take a look at your lifestyle, whether it's makeup, whether it's cars, whether it's fashion, technology, whatever it is that you spend money on. I would check to see if they are publicly traded. As far as any sure thing in the stock market, to be honest, I don't think anyone can guarantee you anything. The only thing that I can tell you is that when I look back to the early 1900s, we've had the stock market since then. The stock market has always recovered, whatever recession it is. If we're looking at the 1987 dip, if we're looking at the dot-com bubble, if we're looking at the housing crisis, if we're looking at coronavirus. All right, if you are looking to build wealth, I would say that dividends are a good way to go. I'm looking to retire early, and right now I am sinking a considerable amount of money into AT&T solely for their dividends. And one way that you can know about other dividend paying companies is actually by simply going to google.com, typing in dividend aristocrats. And the definition of that per Google is a stock that has been paying out dividends for at least 25 years. There's dividend aristocrats and there's dividend kings. A dividend king that I currently have ownership in is Cisco. People who go around delivering food to hotels, schools, hospitals, just to name a few. All right, if we're talking about taxes and the stock market, you can make a considerable amount of money in the stock market, and yeah, you do have to pay taxes on it. So there's something called capital gains. There's something called capital losses. There's something called long-term capital gains, long-term capital losses. So in essence, if you hold a stock for longer than a year and a day, you pay less taxes on that money. So anytime that you end up owing taxes, you owe less if you hold a particular stock for at least a year and a day. That is how you fall under long-term capital gain taxes. Any trade that you make, if you end up buying a stock and selling the stock a year or less, you're paying capital gains taxes. So which is taxed higher than long-term capital gains. It's like a reward for holding on to the stock for so long. Should you diversify your portfolio, as in should you grab different stocks? The best answer that I have for you is yes, because you never know what's going to stick. Just how I'm sitting here with Directed by Kendra, we've gone through multiple takes. I'm not sure what will stick, but I'm confident. All right, so my personal strategy in the stock market, I heard this from Warren Buffett. He said if the stock market was going to be closed for 10 years and you had to have your money locked in there for 10 years, what company would you invest in? Now, me personally, I look at, say, for example, Nike. I look at Microsoft. I look at Google. I look at Apple. I personally do not think that these companies are going anywhere anytime soon. But of course, investing comes with risk. Invest at your own risk. If you don't have time to watch the stock market, that is completely understandable. I have the same issue sometimes. So what I do, I set up trades to be executed at certain price points. I tell my phone, hey, buy at this particular unit, sell at this particular unit. The same goes for your AC at home. Okay, so in regards to this most recent plunge in the stock market, I would have to take you on a little trip going all the way back to 1987, where there was a very similar dip. Right after that, we had the dot-com bubble, we had the housing crisis, and here we are again. From what I have seen, a recession occurs once every 10 years. I like to compare it to Black Friday. How would you explain Black Friday to someone that is not from this country, that has never heard about this one day of the year where you get crazy deals? And here we are in the stock market. Every 10 years, the stars have aligned. We are in another recession to where we have deals with these companies. All right, when it comes to diversification, within my primary brokerage account through TD Ameritrade, I currently hold ownership in several different companies like Abbott, Banner Corporation, Carnival Cruise Line, Delta, Discover, Walt Disney, DraftKings, Enterprise Production Distribution, Guess, JP Morgan Chase, Marathon Petroleum, Dave & Buster, Royal Caribbean, Raytheon, Cisco, AT&T, Uber, and VBIV, just to name a few in my primary brokerage account. The bottom line for this video is investing comes with risk. Invest at your own risk. I say open the brokerage account, fund the brokerage account, buy a share of whatever company you spend money with. So that way you can take solace in knowing that you're recouping in the end. Say, for example, I'm part owner of JP Morgan Chase. If there was ever a time that they hit me with a maintenance fee, I would feel better about myself because I'm part owner. They pay me dividends. So I take solace in knowing that I'm part owner in JP Morgan Chase, regardless of whatever fee I may or may not owe them.